Level 1, the beginner investor. You open your investment account for the first time. The screen looks clean and modern, but to you it feels unfamiliar. Buttons say buy and sell, prices move every second, charts rise and fall, yet none of it feels simple. You deposit your first $500. To some people it may not seem like much, but to you it matters because it came from your work, your savings and your discipline. You start scrolling through companies you already know, brands you use every day, businesses you have seen your whole life. You are not just buying a number on a screen, you are buying a small ownership stake in a real company. At this stage the returns are small. What matters is learning how markets work, how ownership creates wealth and how patience can be rewarded. Level 2, the retail investor. You are no longer experimenting, you now understand that consistency matters more than perfect timing. So you invest every month, not only when headlines are positive, not only when markets are rising. Every month, maybe it is $500, maybe it is $1,000. Whatever fits your budget, you commit to the habit, your portfolio starts to take shape. This is where diversification becomes real. It means owning assets that react differently during different conditions. Then the market drops maybe 10%, maybe more. For the first time you feel pressure. But instead of panicking, you remember something important: volatility is normal, so you keep investing month after month. Level 3, the consistent investor. When your portfolio reaches $100,000, investing begins to feel different. A 1% move in the market now means $1,000. A strong year could add thousands without any extra contribution from you. For the first time, compounding feels real. You no longer think only about how much you can save. Your strategy becomes more defined. You decide on an allocation and stay disciplined. You begin rebalancing. If stocks rise too much, you trim some gains. If they fall below target, you add more. At this level, success is not about finding one magical stock, it is about following a sound process year after year. Level 4, the advanced investor. As your portfolio moves into the $250,000 to $1 million range, your mindset changes again. Small percentage improvements begin to create noticeable results. A 2% increase in annual returns can mean thousands or even tens of thousands of extra dollars each year. You move beyond basic allocation and begin refining the structure of your portfolio. Tax efficiency becomes a serious focus. You think carefully about where each investment belongs. You stop asking only how much can I make, and start asking what happens if I am wrong. Your portfolio is no longer a collection of investments, it becomes a system built to perform across many conditions. Level 5, the high net worth investor. Crossing $1 million changes the opportunities available to you. You are no longer limited only to public markets. Doors begin to open to private investments. You may now see opportunities in private equity funds, venture capital deals and real estate syndications. These opportunities are often introduced through networks, advisors or specialized firms. The rules are different here. Minimum investments are larger, liquidity is lower, capital may be tied up for years. In return, the potential upside can be higher, but so can the risk. Now the challenge is no longer finding investments, it is choosing wisely among many options. Level 6, the professional investor. When your capital reaches $10 million to $100 million, investing becomes a serious operation. A 5% annual return is no longer just a percentage, it can mean hundreds of thousands or millions of dollars. You manage capital with structure and discipline. Public equities may provide growth, private equity may target upside, real estate may provide income, fixed income may add stability. You may create a family office or formal investment entity to handle taxes, reporting, estate planning and long-term management. Performance is measured carefully. You compare results against benchmarks and evaluate whether your strategy is producing value. At this level, avoiding major losses becomes just as important as generating gains. You no longer think like a casual investor, you think like a portfolio manager. Level 7, the institutional investor. Your capital has now moved beyond personal investing. You are allocating hundreds of millions or even billions. You no longer focus on single stocks, you focus on broad allocation decisions. How much goes to equities, how much to private markets, how much to real estate, credit or alternatives. You often invest through managers as much as directly: hedge funds, private equity firms, venture funds and specialized operators. Due diligence becomes critical. A single commitment may involve tens of millions. Liquidity becomes strategic. You cannot move large sums quickly without affecting prices or losing access. At this level, your capital helps shape outcomes. You are no longer just participating in markets, you are helping direct them. Level 8, the billionaire investor. When net worth crosses $1 billion, scale changes everything. You no longer think in terms of a normal portfolio, you think in terms of strategic positions. Investments may involve hundreds of millions or even often billions placed into one company, one sector, or one major idea. You may take ownership stakes large enough to influence leadership, operations, and long-term direction. Public markets still matter, but private deals often become the main arena. Acquisitions, co-investments, and negotiated partnerships become common. Your decisions are visible when you buy, markets notice when you sell, headlines follow. At this level, investing is no longer only about returns, it is about influence. In many ways, the market reacts to you.